There was a small confusion with the link to get this started, but here we are. Nevertheless, thank you, thank you, thank you. Ernesto Vega, broker of Canvas Real Estate, hosting our weekly and the first for the year of Ask the Lender. My co-host, like every Thursday, is Intergalactic Manager, and today he's flying his ship to go assist some clients. Mr. Ruben Crispino, how are you, Ruben?
We're doing great, loving the weather. Like we said, half spaceship will travel on our way to the Aventura area to meet a customer.
All right, fantastic. All right, Ruben. So 2025 is here. 2025 to me is a year of opportunities. I had a little focus group put together with some colleagues, and there was two topics that kept being bounced around back and forth, right? And about all the positive trends that are looking into assisting buyers in this new season, right? So a lot of the buyers that we're seeing, Ruben, are move-up buyers. The move-up buyers that had literally stayed on the sidelines are coming in because it is what it is. So those buyers are looking at HELOCs. So I'm going to ask you a couple of questions on HELOCs, right? And keep focus on the driving. And then with listing inventory creeping up, nationwide, we're seeing a trend where it's not just developers offering these buy downs, it's become a norm. So then I know we have talked about this a million times, but like I said, in this focus group, those were the high pinpoints that everybody had sort of brought up. So I'm going to expand on that, but before I get into that, I see that rates have stabilized as the year has begun. This week was a little clunky, but today again it looks like we have found a footing, right? We have found a sort of a normalcy, in our industry. Is that the way you see it?
Yeah, I mean, what happens too is a lot of these knee-jerk reactions happen based on the current data. The data comes out today or yesterday. And, when you wait a month or two and they revise the data, you're seeing that the confidence in the fact that the rates will at some point start to reduce here, hopefully soon, is still there because some of this data comes out rather quickly. It has to be analyzed. You get a knee-jerk reaction from the investors in the stock market. But when it's really just kind of laid out and understood better, it kind of still points to the fact that the confidence level is high, that the rates should start dropping this year.
Okay. All right. So then, from like I said, the big thing that I heard was that it was a lot of move-up buyers, want to lock down a property now because inventory is up, and they're sitting on an incredible amount of equity. So HELOCs have become a very important part of the conversation. For those that don't know what a HELOC is, it's a home equity line of credit. So Ruben, for those that are hearing this for the first time, what is a HELOC? What are the benefits of a HELOC, and how can a homeowner use a HELOC to buy a home and secure a home without selling theirs?
Well, there's always the situation where they still have to get approved, right? But beyond that, the HELOC is a home equity line of credit, just like you said. It's a line of credit. So there's a lot of advantages to it. Number one, you can use it. You can pay it down. You can reuse it. You never have to close it. Typically, they last for 10 years. So if a borrower wants to pull some equity to make an investment on a move-up property or as an investment property or some second home, vacation home, whatever you want to call it, the HELOC's a great way to do it because especially if they're eventually going to sell the property in question, where they just pay it off and move forward. The HELOC rates are typically a little higher than your traditional mortgage just because it's obviously a adjustable rate. But they take a second position on the property, and they give you the flexibility to take the money now and be able to come up with a down payment to put on a property and secure the property until you sell yours. Kind of
Okay.
works very simple. Very go ahead. Sorry, like a
Yeah.
bridge loan. Use it like a
So
bridge loan.
it gives the buyer that ability to pull the trigger, lock down the property they want, right? Without having to lose that specific property, and then sell their home at a pace that they feel comfortable, right? And then
Correct.
when that one's sold, pay off the HELOC, and you got what you wanted, and you had no stress.
Correct. Correct. Exactly the way it works. It
Okay.
works like a bridge, right? The word bridge, it's a bridge to get from one place to the other, right?
Right. So you mentioned rates, and I assume that they're a little higher. They're not as competitive as the regular mortgages, but a HELOC is could be used for move up buyers, right? So it's just as a temporary, like I said, you said, as a bridge. It's a tool to get you the home that you want, and not losing it. Not saying, okay, you know what, I'm going to put my house on the market. The market is a bit slow. It's going to take me 4 months to get it under contract, then another 60 days to close. So in 6 months, that house that I want, that it's going to be gone. So I'm going to, I don't want to go through that. So I'd rather just, maybe have a little bit more of an expense now, but I'm going to get what I want today with the equity that I have what I'm sitting at.
Correct. It's a great tool to get people off the sidelines, right? And going back to the rates, and I'm always on my soapbox here. Remember, it's not about the interest rate; it's about the interest you pay, right? The effective rate. So, if this is a short-term band-aid kind of loan to get you bridged into your new home, it doesn't matter what the rate is. It's kind of like we talked about. People should not be waiting, because the longer they wait, seems the prices continue to go up in certain very desirable areas, and so they're missing out on property. So again, rate is only based on the interest you pay. In a primary residence, for the most part, it's tax deductible, so your effective rate is significantly lower. And I think that's something we need to teach our buyers, that, hey, don't just focus on the rate, focus on the interest you pay.
Got it. Ruben, how difficult, if let's say I have a homeowner that I'm about to list their home because they want to buy a property, how difficult is for this homeowner to qualify for a HELOC? Let's say they bought in 2011, they're sitting on $700,000 equity. They're looking for $300,000 to put down on the next home. How difficult is for them to tap into with a HELOC to tap into? Is this like a 90-day process, or how difficult? What do they need, and what's the timeline?
So there's a plethora of HELOC options. Some are very quick and easy. And luckily now we have even HELOC for people who are self-employed. In years past, you could only go to a bank for a HELOC. Now we're doing HELOCs ourselves. And we even have bank statement HELOCs now. So somebody can qualify for a HELOC or HELOAN based on their bank statement. So no longer regular qualifying with your typical tax returns and that kind of stuff. The reality is that we have a program for everybody on the HELOC also.
Okay, so then I think you got frozen there for a moment.
Yeah, I was getting a call.
Yeah, I think you froze there for a moment.
Can you hear me or no?
So I can hear you, but we can we have like a mug shot of you on the screen, which is
Okay.
we'll keep the people engaged.
Yeah.
If someone's gonna make an offer and they want to close in 30 days, can they have? There you go. Can they get a HELOC back, and can a HELOC funded in 30 days?
Oh yeah, we can. Depending on their situation, we can get a HELOC funded in a week.
In a week?
In a week. Some
Okay.
HELOCs don't even require an appraisal, right? Depending on, like you said, if they have a lot of equity, makes it easier, right? Because we might even need appraisal. Remember, HELOC is taking a second position, so maybe they have a little mortgage, right, that's left on their home. That's going to stay in first position, and the HELOC is going to be in second. So it's already a risky proposition for the lender. So typically, they're just looking at their credit score more than anything, Ernesto. That's really what drives the HELOCs, the credit score.
Got it. and I assume that there is no, you mentioned you can do a bank statement loan. That these are very easy application process, right?
Well, we have a HELOC which is based on AI. We have our own white label CMG HELOC that we do through AI. That was the fastest one. That's the one that we can do in a week or so. A bank statement one may take a little longer because obviously we have to review the bank statements. But nothing beyond 30 days on any of this stuff. The other thing too is that on a regular HELOC, the closing costs are much, much lower, right? So it's not like they're going to have traditional closing costs of about 3% like we always kind of estimate for closing costs. They're significantly lower on a HELOC than it would be on a regular loan.
All right. So the audience that we have right now, and the audience that will watch this later, they go on a listing presentation. They meet a buyer, and the buyer's like, well, I want to move up or I want to move down. They want to buy a bigger house or a smaller house. But I mean, based on what you're telling me, it's going to take me 6 months. I want to buy this house today, but I don't have the cash right now. You're giving them a solution to the problem. You're telling them, hey, we'll lend you the down payment to buy that other property, and then you can comfortably sell your home, right? Without having to, put a stress on anything on the process.
Yeah. They're basically bridge loans, right? I mean, this is very popular in the Northeast for many, many years. They've become popular down here because now we have equity. Now the pricing here is kind of mimicking what happened in the Northeast. So we have those now. It's that bridge, right, to get you from one to the other. Again, it's a process like we always talk about, just like on a regular pre-approval. We want time. The earlier, the better, right? Because we want to make sure that we go through the whole process. We look at it as a financial advising situation when we're doing mortgage advising. We want to talk, okay, this is where you have now, this is what we're going to give you, this is where you're going to end up. And it's a process, which now we're talking about 3 loans, right? Their existing loan on the house, the HELOC, and then the new loan on the new purchase, if there is a loan, right? Because maybe they're buying cash. But that's something that we need to really manage and explain and educate our customer how we do it. So we like to get those customers on a call, in person, or Zoom as soon as possible.
Okay. One of the questions that came in right now is, hey, is this something that I have to prepay back in a year? Is this a short-term loan that I gotta if the house takes longer to sell, do I gotta prepay this in a year?
So there's 2 options, right? There's a HE loan and a HELOC. The HELOC does not have any maturity time. Your monthly payment on the HELOC is going to be interest only. It's a very low payment. You're not going to be paying any principal on that, at least upfront or when you first start. You can pay it off whenever you want. You can put a lump sum. You can get your tax return and pay it down. You can pay it down when you sell a house. So you have plenty of options with the HELOC. On the HE loan, you can have options too. You can do a 5-year HE loan. You can do a 10-year HE loan, and that would be amortized, at that time frame.
If I was you, I wouldn't go in there because we'll lose you if you pull up to the garage.
Oh, okay. Let me just park.
Yeah, we got like 6 more minutes, and I think I got 2 questions. So
No,
there's no you don't have to pay it off in a year. You can go ahead and if it takes a little longer to sell the house, you're not being forced to sell the home.
No, I mean the reality is you're going to pay interest only. You can pay it off when you want to. You can keep it as long as you want, and you can pay it off and reuse it. Right? Let's say you paid it off, whatever. You got a big check and you paid it off. It's still there. There's no need to close it. I think there's a very small yearly fee of $25. Is that right? Still about $100, $25. I think a year. That is charged just to maintain it, but you can use it for paying for a wedding or paying for some credit cards. You can use it for whatever you want once you've already, or repairs, right? Let's say you want to do some additional repairs to the property you're buying, also a good option. So if your customer finds something, for example, that they really like, but it's not in the condition they want it, it's another option to be able to have the money to repair the property.
Got it. I think Irelis had a question. Irelis, are you there?
Yes, I'm here.
Hello, how are you?
Hi, Happy New Year.
Happy New
Hey,
Year. So
Alex,
you
how
got
are
a
you?
question?
Yes. Yeah, if it is two owners and one of them, only one of them can apply to the HELO, or both of the owner of the property have to apply?
No, one of them can apply.
One of them. Okay.
Yeah.
The closing costs, just for us to make it like a calculation, it was 1%, 2%. You have any
No,
percentage?
it's much lower than that on a standard HELOC. You're talking about a couple $100, honestly, less than $1,000. Now, on the bank statement one, it does become closer to like 2.5%. So it depends on which one it is.
2.5%.
Yeah, that's
Okay.
on the bank on the bank statement one, but on the standard one, the one that we can do like in a week, it's just a couple $100, maybe $1,000 or so.
Okay. In the HELOC, I know that you pay interest only and it's no prepaid penalty, but the HE loan, you pay interest plus principal or just interest as well?
No, on the HE loan, you pay principal plus interest. Yeah, you're right.
In the HE loan,
In the HE loan, yes. So at the
interest.
end of 5 years or 10 years, whichever one they choose, it's paid off.
Okay. And the other, what is the LTV?
So the LTV can go as high as 89.9%.
89. Okay, perfect. Like
89 point, like 90. I don't know why we don't go to 90. I don't know why they use 89.9, but it is where it is. Basically 90%.
Okay, perfect.
All right.
Okay.
Thank you for those great questions.
Those are great questions.
So before I let you go, because only a couple of minutes, the other thing that the focus group brought up a lot and they talked a lot is buy downs, right? So what I brought down, and I wanted you to correct me, is the buy down makes the monthly payments more affordable, either for the entire length of the loan or for the first couple of years of the loan, depending on how you structure it. So it helps that buyer, move in and be more comfortable for the first year, 2 years, or 3 years. So then it helps that seller offer something that most sellers are not offering, right?
Correct.
Was I off the chart there?
So the buy down, no, you're 100% right. So there's a couple different ways to look at the buy down. Again, it depends on options, right? Some people buy red cars, some people buy blue cars. So it depends on what this works best for the buyer. A temporary buy down could be a 1-1, 2-1, or 3-2-1, and it's a temporary buy down, so it'll only be for that year. So if you do a 3-2-1, it's for 3 years. Again, it's just a way to get in to save the money up front. We know, we have confidence that the rates will come down. They can refinance in a year or two, and then get a permanent lower rate within that 3-2-1 buy down. There's nothing stopping them from doing that. And we also have the permanent buy downs. I like the permanent buy downs better because you're kind of done, right? And also they get to qualify at a lower rate. Costs a little more money, but I think it's, in the market that we're in, it's really the way to go.
So, but if I'm offering, if I have a listing, it's a bunch of people listening to you that have a listing that they're trying to move that listing, right? They want to get that listing sold.
Yep.
If they offer the 3-2-1, right, that will give that buyer, for the first 3 years, which 3 years is a lifetime, ladies and gentlemen, for the first 3 years, a lower payment while the market does whatever it's going to do.
Correct. Yep. And
Right.
that's cheaper. The regular buy down, or the program that we have, which is called the list to lock, which is working phenomenal for all of us. Fantastic program. So the advantage you get on the list to lock is, number one, we're contributing. So CMG is contributing 1 whole point towards the buy down. So we're actually putting our skin in the game, and it's a permanent buy down for the buyer, so they never have to refinance. And the other big advantage is that they qualify for the loan at the lower rate. And what that does, it opens up the market. So if you take that buy down from, let's say, a 7 to a 5.5, and again, I'm just throwing numbers out there, you're going to have, 1 million more people be able to qualify for your house or more, just because now you're offering, buy this house permanently for 30 years at 5.5. And CMG will pay 1 point of it. So as long as the seller also pays at least 1 point.
So you'll match the point of the seller pays.
Correct.
All right. So we're gonna wrap this up. I know there's gonna be a lot of questions. Everybody that has a listing should do themselves a favor and reach out to Ruben and find out how the list and lock works on a one-on-one session. Because if you have a listing and in your MLS you can say this property qualifies, and I'm just throwing a number for a 5.5 interest rate, you're gonna get a lot more buyers directly to you than realtors calling you. You're going to get a lot of buyers. You're going to double end that transaction. You're going to get both sides just by having a conversation with Ruben and his team and understanding how the buy down will help you get that listing sold. Before I let you go, Ruben, I know me and you went back and forth on Mr. Habib comments, and Habib's comments got a lot of play everywhere. And Barry, to me, it's one if not the smartest economist out there in the world right now. And literally, he's stomping the ground, saying that the rates will be below 6 by April. He's like staking his reputation. And if you guys don't know who Barry Habib is, I'm gonna put it right now on the chat what he said and his name, and you can look it up. What's your take on Barry? Because Barry's like, listen, God damn it, listen to me. I know what I'm telling you. What's your take on Barry's comment? For the public, you love Barry.
I love Barry. Barry's a friend of mine. We talk all the time.
Yeah.
So, no, actually, we did. We're going to see him this weekend again up in Tennessee at our meetings. So, yeah, he's a good friend of CMG's. We use him for all our stuff. When he's wrong, and as long as I've been following him, he's only been really wrong one time. It's something out of his control. In other words, a war or the what do you call it? The COVID situation, stuff that's out of his control. But he really knows how to read the market. And kind of when we started this conversation, I talked about a lot of data that comes out that really needs to be dissected, and that's what Barry does well. So if Barry says it, it's hard to tell him. I'm not Barry. I'm not an economist. So I'm not going to say. I'm hoping he's right, and he's usually right. His fundamentals are very good. So from his mouth to God's ears, like we said. So let's hope for that 5.5 by April. That'd be great.
All right, I'm gonna let you go in your spaceship. But one last thing that came in, they're asking me, can I do a buy down on a condo? And you froze.
Yes, you buy down anything.
On anything.
Yes,
awesome.
You,
all right.
You do a buy down. Okay. So one more thing
Thank
before I let you
go.
Go
ahead.
The list and lock is on $49. Okay, it's not a big deal, but not only is it something you can advertise on the MLS, it comes with a bunch of marketing too. We'll make a sign rider for you. We'll do a bunch of social media posts for you if you do the list and lock. All right, it's really, really good, guys. Take advantage of it.
Yeah, if you got a listing, give Ruben a call. Thank you, everybody, for joining us. My apologies for the confusion with the Zoom link, but thank you for joining us. And another Ask the Lender. Next week, we'll have a full week of trainings and classes. Don't miss them. I am here in the Doral office if you want to pop in, if you get any questions. And tomorrow I'll be in Weston. Have a productive rest of your week, everybody.
Bye-bye, guys. Thank you.